So hi, Nadia. Hi, Antoine. So we read your interesting article on the challenges that may arise from implementation of the EU taxonomy and have a couple of questions. But before anything, could you please put this all into context and walk us through the main features and purpose of the EU taxonomy?
Hi, Jim. Hi, thank you. Yeah, indeed. Hi, Antoine. Thank you very much. Yes, absolutely. So the EU taxonomy intends to create an EU-wide classification system, establishing a list of sustainable economic activities. The idea is to provide companies, investors, and policymakers with a science-based transparency tool to recognize economic activities that contribute substantially to sustainability objectives, while not significantly harming any of the objectives.
So does it cover every economic activity, or are there limitations to its scope?
Well, the initial version of the text only foresees 6 environmental objectives and covers the economic activities of roughly 40% of EU domicile listed companies in sectors responsible for almost 80% of direct greenhouse gas emissions in Europe. This means that some economic activities or some sustainability objectives, notably social ones, are simply not covered at the moment. There are businesses that are not part of the tool. However, please note that the EU taxonomy should not be seen as a static tool or a final framework. It will evolve over time in line with climate emergency to cover more economic activities, more sustainability objectives, and to adapt to technological developments.
So from a practical point of view, what does the tool rely on? You mentioned that it's science-based, but can you tell us more about this?
Sure. So the taxonomy regulation itself is accompanied by delegated acts that clarify technical screening criteria. We call them TSC. This scientific TSC provide the conditions under which an economic activity can be considered as environmentally sustainable, under the EU taxonomy rules. These qualitative and quantitative TSCs will differ from one objective to another and from one economic activity to another.
Okay, thank you, Nadia. I think you had an example for us. Would you like to walk us through it?
Yes, Antoine?
Yes, sure, Jim. Thank you, Nadia. Thank you, Jim. Indeed, so on the slide here, you can see a case study or a bit of practical example, because all this is a bit abstract, which helps us to walk you through really how you can use the taxonomy and how you can apply it to a specific company. So in this particular example, I'm looking at a standard utility company, and I will try to show you how you can apply the various steps of the taxonomy to this company. So the first step on the middle of the slide is to identify economic activities which are covered by the taxonomy. So as we just explained, not all economic activity, not all businesses are covered. So in the case of a utility company, it's quite easy. If you look at the bottom of the slide, let's say this company is generating electricity from, has the good old coal-fired power plant. Then it has also hydropowered energy and then wind-powered energy. So obviously, electricity generation from coal, this is not covered by the taxonomy. So on the example of the bottom of the slide, you can already, the first step, consider that this is not taxonomy aligned. This is not even eligible under taxonomy. Hydropowered energy and wind-powered energy, however, they are activities which are covered by the EU taxonomy. We can then move to the second step, which is look at the technical screening criteria that Nadia described and see whether or not the conduct of this specific economic activity is done by respecting the technical screening criteria. So we go in the taxonomy, we look for the economic activity. So in that case, let's say hydropowered energy, and we will look for the criteria. And the criteria says generating electricity from hydropower plants, that will be taxonomy aligned if the generation of electricity is done on emissions which are below 100 grams of CO2 equivalent per kilowatt of electricity generated. This is on a life cycle assessment, and the idea is that if you can demonstrate that this plant operates below this threshold, then it's taxonomy aligned. In my example here, I assume that I do not have the data and that the company is not able to assess that. So I have to assume that I'm not meeting this criteria, so I cannot move forward. And I will consider that this part of the business is also not taxonomy aligned. So I still have the last activity, wind-powered electricity generation. In that case, it's considered as so sustainable for the moment that there is no threshold for significant contribution. So I can pass as well the second step, and I can move on to the third step, which is, now that I have found an economic activity which is covered, I am comfortable that the conduct of such economic activity respects the criteria for significant contribution. I will now ensure that I am also not doing significant harm to other objectives. So now I will still look at the technical screening criteria. I will still look at the specific section on wind-powered energy, and I will look at the criteria I need to respect for DNSH. So we're talking here about, did I make sure I had an environmental impact assessment study before building the wind farm? Did I worry about underwater noise pollution? Did I worry about how I will recycle the pails, et cetera, et cetera? If I meet all those conditions, which I suppose is the case here, I can say that the conduct of this economic activity significantly contributes to one objective and also does no significant harm to the other objectives. So I can move on to the step 4, which is making sure that while the activity respects the criteria, the company which conducts this activity also respects minimum social and governance safeguards. So this is, general good governance practices. So I make sure that there is no issue on that side as well, on the side of the company which conducts the business. So here I assume it's the case as well. And I can move to the final step, which is calculate taxonomy alignment for this specific company. And in the case at hand, I took the assumption that 50% of the turnover of the company is generated from wind power energy generation. And I can then say that this specific utility company is 50% taxonomy aligned. Then we can use other rules to see then how we aggregate the specific alignment of each company at the level of a portfolio for an investment fund. And this is what you will find in the famous level 2 and the RTS, which have just been released.
Thank you, Antoine. That's very interesting. Thank you. I can imagine that for the taxonomy to work, actors will need to have much more and better non-financial data from companies. Does this mean increased transparency and reporting obligations are coming for all?
Yes, indeed. So the taxonomy is, as Nadia put it, a tool. It's a screening tool. It's a good tool, which is very useful for the financial sector, investment fund and market participants, but it also applies directly to underlying companies. So operational companies, at least in the EU, will have at some point to report their taxonomy alignments. So the scope is still moving at this stage. So for the moment, the companies which are in scope are companies which are subject in Europe to the non-financial reporting directive. So we're talking large listed undertakings. These companies, they have to do it already now. I mean, the deadlines are in a few years, but they are already in scope. So it's sure they will need to do it. But there is a broader project or broader work stream which is being conducted at EU level where we are trying to enlarge the scope. So this is notably one of the objectives of the Corporate Sustainability Reporting Directive, which it's a proposal for a new directive which amends the non-financial reporting directive. And one of the objectives is to enlarge the scope of companies which are subject to non-financial reporting in the EU. So to include also listed SMEs, to have just more companies falling under the scope. Because only when underlying companies report their taxonomy alignment can the financial sector really then assess the alignment of the various portfolios. So they play really a crucial role with that respect.
It seems to me a wonderfully ambitious piece of regulation, but one potentially fraught with difficulties, especially over the science. Do you foresee an enormous volume of legal disputes and litigation, especially regarding the do no significant harm stipulation? I'm thinking of things where you're mining for rare earth minerals, and there's obviously some other environmental impacts, or even potentially nuclear energy, or many other things that have unintended consequences.
Yes. So when it comes to those activities, it's always a trade-off, right? There are very few things, let's say, if not nothing, which will be not controversial or fully green or fully sustainable. But the point of the taxonomy is to try to agree on a minimum set of rules, which are as much as possible based on science. And so we all look at the same condition to call any activity as environmentally sustainable. On the significant contribution side of things, the room for legal dispute is quite narrow because it's very much quantitative criteria. So maybe we can discuss that, maybe the carbon footprint was not assessed properly, or, this is things which should, happen for sure. But there is probably a bit more, it will be more difficult on the do not significant harm, because quite often the criteria for do not significant harm are much more qualitative. So this is where you have room for interpretation, and this is where, you need to be careful to have done this properly, so you can defend that indeed the conduct of this economic activity is done in an environmentally sustainable way.
And how do you measure the proportion of green business? So I think there's talk of capex or turnover. When do you use one? When do you use the other?
Yes. So in the example on the slide here, I looked at turnover. So indeed, the way you screen a company against the taxonomy is based on three different KPIs. That's what is proposed in the regulation. You can either use the turnover of the company, you can use the capex of the company, or you can use the opex of the company. The idea is that with turnover, you are assessing how much revenues the company is generating from green activities, let's say. So you're sort of assessing companies which are already green or sustainable today. They already have businesses, products, and services which are aligned with the taxonomy, and they generate money out of it, and this is what you're assessing. With capex and opex, you take a much more forward-looking approach, and you try to see companies that they are maybe not sustainable today, or not so sustainable today, or they don't generate revenue for it. However, they are making the necessary investments, necessary changes to be able to generate tomorrow revenues from green economic activities. So you're not measuring the same thing, but you can use both. Every company, so when you fall directly in the scope of the taxonomy, you have to do the three of them. But then it gets very technical, and it's accounting rules. But you have to do the three KPIs as investment funds and as people on financial market participants. You have to use by default turnover, and then if justified by the features of the product or of the company, you can take an alternative KPI. But the point is to give a fair view of a portfolio. You should have to choose one KPI and use the same KPI for all the companies you have in your portfolio.
Okay, that's interesting.
And just to conclude on the need for non-financial reporting, this is one of the key issues today with putting the taxonomy in practice, is that a lot of companies, but it happens that not all companies have a clear view of how much to generate from each business line, from each product, from each service. So this is something that, having this granular view of the breakdown of the turnover of the capex is something that is missing. And if you don't have that, you cannot adequately estimate taxonomy alignments.